Welcome back. I'm going to present to you right now Buy Oklahoma New Builds Cash Flow Income Property at entry level pricing at 40% return. That's right, 40. This is epic. This is historic. This is unprecedented. With that in mind, I'm going to give you some very factual information. Oklahoma income property, epic returns, as I mentioned. So this is the blueprint I've been using for more than 20 years in helping hundreds, if not thousands of my students and my real estate investors from all over the country. So what I do is I enter all the markets, all the housing markets before the growth happens, right at the beginning of the path of growth. Enter early before the rest of the mainstream people or media get hold of it. So over the years, this is the blueprint I have used. Get in early. So I've entered many for the past 20 years. Like I said, those fast growing markets, the mainly Sun Belt market. That's where all the growth has happened for the past several decades. And for the next few decades, all the Sun Belt, the best, highest quality of living where people are moving to. Epic migration, population growth, job growth, and most important of all, the shortage of homes to buy and shortage of homes to rent. Again, I'm not going to go over, but I have entered all these markets, as you can see. And our investors have, over the past 20 years, have made some massive amount of appreciation and passive income, rental income, so they can achieve retirement. Many of them become not only millionaires, but multimillionaires that I have personally helped over the years. And my blueprint will continue, mainly single family homes, as you can see, 3-bedroom, 2-bath, 1,350 square foot or thereabout. We have experienced many housing cycles, mostly good, but over time, this boom town market, this small town market at the beginning of the path of growth has transformed into an epic metro over the years, as you can see. With that in mind, and my headline is real estate is absolute gold mine, which is small town USA. That's right, you heard me, small town USA. This is the future for mom and pop real estate investors. If you want to get in and make massive amount of money, if you want to achieve massive wealth over time, this is the strategy. This is the blueprint. This is, I'm not going to go over every single line item here, but you can feel free to pause some of this slideshow to digest this type of information. But at the end of the day, you get in early in the path of growth before the area will massively skyrocket. Here we are in the suburbs, into exurb actually, an hour away from the metros, in suburban areas, and you buy new constructions as an investor at 50% below nationwide median price. The nationwide median price right now is around $400,000. So you buy in a price range of 150, 200, and 300K and rent it out and achieve massive cash flow appreciation and the whole 9 yards. Okay, you buy when there's job and economic and population growth and all these amenities, all these fundamentals in the local area. Major employers moving, manufacturing plants, bringing in thousands and thousands of jobs. Okay, good rental market, desirability. There's a demand-supply imbalance. There's more demand than there are supply of homes, so therefore home prices will increase as a result. Furthermore, it's landlord friendly. As you can see clearly on this particular article from Redfin, the growth of rural home value have outpaced suburban and urban. The urban core, downtown with major metros, are falling behind. Everybody's moving into the suburbs, into the exurb. So there are several small town USA, if you call it, areas that are about to boom. We're talking boom towns. And today's market, Oklahoma is one of these boom towns. You did not know that, I'm sure. So most important thing is you buy at the beginning of the development, which is the key before home prices skyrocket. The biggest opportunities always come from being early. Once these changes start taking effect, the window to position yourself ahead of them closes forever. So you have a small window of opportunity. How small? I don't know. Only several years. We're talking few years. If you miss the boat, if you continue to stay on the sidelines to take advantage of these opportunities, you're going to be regretted 10 years down the road. So pull the trigger. You get in early when there is very little competition, because nationwide we have a lot of fear. I'm going to talk about this. Be greedy when everybody's fearful. Be fearful when everybody's greedy. Right now, there's a lot of fear in the housing market about the economy and all that. That's why you need to capitalize. You need to be greedy in a good way and use this contrarian investing approach. Does that make sense? I hope it does. So this is the blueprint I have used for decades in helping myself to grow my wealth, as well as hundreds and hundreds of my mom and pop real estate investors from all across the country that are part of my network. So you can be part of my free network to dive into, to learn more about these unique opportunities, not just in Oklahoma, but in several other markets we are also promoting that have similar infrastructure, that have similar fundamentals and attributes that I look for in a particular housing market. And furthermore, you need to buy affordable new construction in affordable growth markets, like here in Oklahoma, with low interest rate. We have builder buy down the rate. We have builder helping with the seller, that is, that we use, or that they will help you to pay 2% of your closing costs. They will give you at least 1 to 2 years of free property management, so you can increase your cash flow and also get a very good interest rate, so you can cash flow in your property from the beginning, and a very strong rental market, because there's a massive shortage of homes to buy and to rent in this market that we are about to talk to you about. So as a result, you buy long distance, you buy remote, buy turnkey, new builds, cash flow rentals. Isn't that amazing? Have you heard of this amazing concept? If you have not, I'm glad you tuned in to this presentation. The benchmark expected is a total ROI, return on investment, of at least 40%. Anything less than that, do not buy, right? So if you look at the nationwide, if you look at across 50 states in the U.S., across 10,000 cities and 3,000 counties and hundreds, around 400 metros in the U.S., you will not find an income property that will achieve you 40% return on your investment in the first year alone. Imagine the first year alone will give you that much. Imagine in the next 5 to 10 years, when you own this property long term, over time, your rent going to increase as a result of inflation, 3, 4, 5%. Expect to increase your rent, so your cash flow can be higher down the road. Then your passive income going to be higher. Then your renter going to pay down your loan over time for the next 10, 15, 20 years or more. Then if you get a 20 to 25% down payment mortgage, the renter, you're going to outsource the debt payment to your renter. You're going to delegate all the things to a property management to manage your property, so you can invest in this kind of income properties pretty passively. You're not trading your time for dollar. I say it again, no matter how many property you're going to buy, you will spend almost no time on a daily, weekly, or monthly basis. Whether you buy one income property using this methodology, or you can buy 100 income property, the total time you spend on a monthly basis, maybe 1 hour, maybe 2 hours. Okay, doesn't matter how many properties, because you are delegating, you are outsourcing and you are playing the smart game. You are making the property manager and everybody else you on your team will do all the work for you, so you can free up your time to do the things that are important to you, like traveling or taking care of your family. You can dictate your time, work, freedom. That is the right. That's the motivation you have passively. Live off the passive income, and uh, eventually eliminating your W-2 job or making your W-2 job optional at some point in time in the next 5 to 10 years, depending on how many properties you can leverage and scale over time using this passive investing approach. Does that make sense? Some of you are not going to believe me. How am I going to get 40% return on your investment when the stock market are only getting like 3, 4, 5% on a historical basis? Oh, as a matter of fact, if you want to do an apple to apple comparison, compare the returns on historical basis with income property versus the stock market, here's another opportunity for me to give you an apple to apple comparison. Why investing in income property will give you 10x or more return than any type of mutual funds or stock market out there on a historical basis in the past 100 years. So, in fact, I'm going to give you some bonus. I'm going to share with you the factual numbers of why this benchmark is the expectation you should have if you used my business model, if you use my blueprint that I've been using for decades and helping tons of people. That's right. 40% ROI, return on your investment. And I'm going to justify my number. Before I do that, here are some more numerical formulas you need to ingrain into your head. And you can learn this more as you continue to get educated about real estate investing. So this additional benchmark that for right now, that's all you need to know, because I have other videos that I have produced that will give you some very detailed explanation of what this numeric formula means. But suffice to say, this property I'm presenting to you is achieving this numerical benchmark, which is exceeding expectation for real estate investors. So you're going to get the 1% rule. 1% multiplied by the purchase price equal the monthly gross rent. And this benchmark will give you very significant positive cash flow at the end of the day. 8.5% capitalization rate. Again, I'm not going to give you any more details on this particular presentation because I don't have the time to talk about it. Cash on cash return. Anytime you get a cash on cash returns at 10% or higher, that is really above the benchmark, what a real estate investor would expect. And of course, total ROI, 35 to 40% in the first year only. Isn't that absolutely mind-boggling? That's right. It's realistic. It's happening on the ground. This is real. This is not theoretical. This is not overhyped. None of that. Because a number of our investors have already achieved this type of return as we speak on real time. They are pulling to trigger. They are getting cash from day one when they close escrow with a total turnkey approach, property management, the whole 9 yards. This is how I'm going to justify the 40% ROI the first year. Here we go. This new builds $155,000. That's right. 2-bedroom, 2-bath, 850 square foot, new construction. By the way, on a historical basis, prior in the past 100 years, or the next few years, or even beyond, I don't know, the future, you would not find a new construction property in a great location that was selling for $155,000. And we work with a local builder who are building these high quality homes for our investors. This is a off-market listing. It's not in a multiple listing service. If you're part of my network, you will potentially have access to these opportunities. All you have to do is join our free network. All you got to do is put your email on the body of my description on my website, log in, put your email, then you become a free member of our real estate investing community, the Year Real Estate Network. That's all you gotta do. And you can learn more about these types of opportunities in Oklahoma, as well as several other growth markets that we are participating in. So amazing, shocking, true new construction. How cool is that? You're not going to get this anywhere. $165,000 purchase price. It's all done, turnkey, passive, pretty much 99% passive management. You almost do nothing. The property management does everything for you. They collect the rent, they pre-screen the tenant, they manage the property, they do all the maintenance, if any, which is very little because this is a new construction with 1 year and 10-year warranty. So it'll be 10, 15 years down the road, even at that, before you can replace the boiler or electrical system, almost maintenance free for the next few years of your investing experience. Isn't that cool? Much better than buying older properties that many investors are doing at this moment in time. You put 20% down payment, good financing, you have good credit and all that. So your total out of pocket is $31,000 plus some closing costs of $5,000. So your initial cash invested is $37,000. That's how you leverage using a 30-year fixed rate mortgage at approximately 6.6%, 80% loan to value, and the gross rent is $1,350, almost 1% rule. $155K multiplied by 1% is a little bit less than 1%. So this is an amazing benchmark. Look, we've been hearing lately for the past few years, there's no more cash flow. There's no more cash flow properties. That's what we've all been hearing. You gotta dig deeper. Since you found me in this YouTube channel, good for you. There is a 1% rule still available. There are still cash flow properties available somewhere in the country. Some of you are thinking, oh, the only cash flow property you can buy is in the Midwest. That's true. The Midwest, where you buy 100-year-old properties for $50,000, $60,000, you may get a rent of $650, $700. That's a 1% rule. So you're not going to find 1% rule in the way I just shared with you in the growth market, in a fast-growing A-class market with the best tenants, and in the Sun Belt, fast-growing area where you can get both cash flow and appreciation over time. Brand new property. This is absolutely mind-boggling, if I have to say so myself. So let's continue. Therefore, then you get a free first-year property management. So property taxes are very low, below 1%. Insurance, very minor. Your rental income, your gross rent of $1,350 minus your mortgage of $794 monthly mortgage. Your taxes, $138, insurance, $80, no property management fee the first year. You have a net monthly positive cash flow of almost $300. Oh, some of you are thinking, this all I'm going to earn? This is my return? I pay you $37,000 to put a down payment on this property, and I'm only getting $300 cash flow per month? No, that's where you are wrong. So many rookie investors, they compare the measly cash flow versus their down payment and thinking, oh, it's low return. I might as well invest my money in the stock market. BS, crap. That is, you've been misinformed. That's not how you calculate return on an income property. I'm going to share with you the real return. So we agree that the monthly cash flow, hey, if we can get any kind of cash flow moving forward, that's a win, because over time, you could increase your rent, your passive income, your cash flow going to increase exponentially for the next 10, 15, 20 years, hopefully. So therefore, I'm just going to go over the first year, $300 monthly net cash flow multiplied by 12 months. So your annual net cash flow is $3,500. And then, because your loan being amortized, being paid down by the renter, at the end of the first year, you will capture the economic value of a principal reduction to the tune of $1,353. I'm not going to have enough time to calculate the economic benefit of a principal reduction year over year, but trust me for right now. And then I put a very conservative appreciation rate at the end of the first year in this Oklahoma property at 5%, and the vacancy 3%, very realistic. No property management fee, no maintenance at the end first year because you have a first year warranty because you're buying new builds from this high quality builder. This builder is a very high quality. We only work with them. They only build for our investors, which is amazing. I couldn't tell you the value of buying a new construction property versus a much older property somewhere else in the country where I experience a lot of stress and maintenance and upkeep and vacancies. I'm not going to go over that. I have other videos where I talk about that. Buying a new construction comparing to buy a older rental property in other part of the country. That's a whole another presentation I'm not going to talk about today. So therefore, at 5% appreciation, 5% multiplied by the purchase price, $155K, at the end of the first year, your appreciation is $7,750. And actually, I failed to talk about and calculate the tax benefit. You get depreciation. You get depreciation on your property. You can get right off a paper loss. Again, I'm not going to talk about taxes right now. It's just so many additional benefit associated with owning an income property. Suffice to say, your paper depreciation write-off can offset against your W-2 income. So you can make the argument that your tax savings at the end of the first year could be around a couple of $100, $200 or $400 net cash flow, net benefit coming back into your pocket. So your gross equity income is probably higher than $12,679. How I calculated that? Annual net cash flow plus principal reduction economic benefit plus the first year appreciation, $7,750 equals almost $13,000, even more with tax benefit, divided by your down payment. That's a simple calculation of $37,000 equal total return in the first year of 34%. You plus the tax savings, you might as well up this return to 40%. Therefore, the 40% benchmark moving forward when you buy this kind of property in our market in Oklahoma, various markets that we have. I'll give you more details what location Oklahoma, but we have properties in Florida and in Alabama and in North Texas that have similar returns, similar fundamentals, similar concept I'm sharing with you in this Oklahoma. Just hold tight. Again, first year return is almost 40%. This is absolutely mind-boggling. Rent to value is almost 1%, 8.5% capitalization rate, cash on cash return of 10%. This numeric benchmark is off the chart. I repeat, you're not going to find any kind of property, let alone new construction, anywhere in the country with all this amazing numerical metrics return. With the most important thing is the total ROI first year. Imagine second year, third year, fourth year, 10 year, when you have increased equity over time and your tenant's going to pay down your mortgage, so you have more loan to value. And then you have a long-term appreciation, 3-5% or more. And then you have increasing rent due to inflation. When inflation increases, your rent going to increase. Is that the amazing multi-dimension aspect of owning an income property is unbelievable. There are 5 ways to make money, not just cash flow. Cash flow is only the tip of the iceberg. You do not measure your return on your property based on a couple of $100 monthly cash flow. No, that's not the name of the game. So if you learn nothing else on this presentation, you learn about how to calculate your overall return of your income property over time, long-term investing, stay the course. Oh my gosh, there's so much missing information out there. So I'm here to educate you and inform you and show you what market is the best to buy income property moving forward, 2025 and beyond. Isn't this value add? Oh, by the way, if you receive any value whatsoever from this short video, please like and subscribe to my YouTube channel and also become a free member of our investment community by putting your email into our website, newsletter, sign up database, so you can learn more, right, about our investment community. So now you got it, right? So this is amazing. That's more. This week's off-market listings will go fast because we have more investors that are buying these turnkey homes than we have available. As a matter of fact, we are out of inventory in many of the markets that we are promoting. We're promoting in Oklahoma like 5 different areas, 5 different suburbs in Oklahoma. And our new builder, they have no choice but they have to build more homes for our investors because our investors are buying this kind of a new construction turnkey homes like hotcakes. And they ran out of inventory. It's just like that. The phase one, if I call it phase one in the various submarkets that we're presenting, we typically have like 100 properties to sell. And within a few weeks, they're all sold because our investors understand the value of buying these kind of properties. And the builders somewhat are surprised by the huge demand from our investors that we have within our network that are located throughout the U.S., by the way. They buy sight, many of them, most of them buy sight unseen because they trust my network and they trust my relationship with the builder that we have created, which is truly value add that you're not going to see with any investing organization out there. By doing that for so long, we have some great relationship with the national and local builders that built this turnkey new built home at a below market price for our all market membership. So it doesn't cost anything to join or just be a part of our free membership and you have the opportunity, if you qualify, to do this. This is pretty shocking, really. I bet you have not heard anything like this. This two-bedroom, two-bath homes, we call it cottages. They're located in several markets in Oklahoma. But this is additional numbers that you can look at on your own. I'm not going to spend any more time on the numbers. Suffice to say, all this number is going to increase exponentially over time. So at the end of the day, in 10 years, I give you 10 years, you buy 10, you buy 10 in the next few years. If you have the ability, you buy 10 properties and you retire in 10 years and live off the passive income, maybe around $5,000 to $10,000 net monthly positive income. And your net worth on these 10 properties will grow to beyond several $1,000,000 because of the compounding effect of an income property. So that's a no-brainer. So this is again, we have many locations. One of the locations is cannot be spelled Chickasha, Oklahoma. Is in the suburbs of Oklahoma City, 35 minutes away from Oklahoma City. This is the path of growth. I'm not going to go over all these fundamentals. You can learn more about it on your own. You can Google because this is a fast growing market, strong rental market, affordable entry point, prime location, thriving local economy. Why invest right now? High rental demand with high rising yields. Make it a great time to invest. Limited competition compared to larger metro areas. You can maximize your return before demand surges. That's why you get in early, pull the trigger early while everybody is fearful out there. So lack of competition, you get the better deals. You get a slight discount. You get some from buy this property compared to a regular traditional new construction in local area. If there are any, they're not going to sell it for you for this cheaper price that our members get to purchase at a discount because of the power of the network and power of volume, just like Costco, volume discount. So our builders are frantically trying to build in the next phase, the next 3 to 6 months, all over Oklahoma to accommodate the tremendous demand of our investors, which is absolutely mind-boggling. They have this kind of property, by the way, $155,000 used to be $150,000 like 6 months ago. So the builder are raising their prices. So that's good for you. When you get in early in the path of growth stage, the building construction could increase the cost. Oh, by the way, in case you have not heard, the tariff that are imposed by Donald Trump is all the home construction materials will be more costlier, especially from China. As a result, the cost of construction, the cost of constructing a new house these days will go up. How much? I don't know. I'm guessing 15%. When you buy new construction properties anywhere in the country, in the foreseeable future, you are going to pay a higher price. I don't know when. So there's more the reasons why you buy at this lower price point before the cost of construction, the labor costs, and materials that will cost for the new construction. It'll be more. So you pull the trigger now. You buy at a discount before the prices will rise, and we will rise. This, especially new constructions, the national builders and the local builders, they have no choice but to increase their construction cost as a result of the tariff that are imposed by President Trump. Does that make sense? Let's continue. We have duplexes. Duplex for only 320,000, brand new. There have been some already to be purchased, some are under construction. You can put a security earnest deposit. Actually, I don't know how much, several $1,000s earnest deposit, so you can reserve the lot as the builder can build some of these new builds because they are surprised, they are shocked by so much investor demand to buy these off-market properties. So they are constructing new homes, like single-family homes and duplex across the Oklahoma submarkets that we are promoting. Suffice to say, duplex, same type of return, cap rate, cash-to-cash return, positive cash flow, 25% down payment, cash flow increases, projection, as you can see, for the next 10 years, total return. Study on your own on all these metrics. It's just mind-boggling, very attractive. Look at the quality of construction. When you buy new construction, you can attract the best type of tenants. Your tenant's gonna stay at your property. Don't be surprised if your tenant's gonna rent your property for the next 2 or 3 years. One tenant, and the tenant is a high quality tenant because they love to rent a new house. They want to stay longer, and they're willing to pay premium rent to you as a landlord. It's absolutely amazing. I couldn't even begin to tell you the number of positive reasons to buy new construction as opposed to much older property, given this price point anywhere else in the country, especially the Midwest. The Midwest, you get similar cash flow, but those metros are not growing as fast as Oklahoma, and investors are buying those resale homes in the Midwest with similar cash flow, not appreciation, of course, not even close with the growth that we have here in the Sun Belt, here in the South and Southeast. But at the end of the day, there is just no comparison. It's not an apple-to-apple comparison. Buy new construction at this such a low entry-level pricing. Look at this beautiful interior. Of course, with other markets available, as a result, it's just we have the whole system, the whole process, the whole business model available for you to make it a turnkey passive investment, almost passive. You do nothing. You don't see the tenant. You don't talk to the tenant. The property manager will do everything for you. Our team on the ground will take care of your property for years to come. Essentially, you are a passive investor. I mean, isn't it amazing? Most people have this misconception that when you buy income property, you have to fix it up yourself. You have to be right there to fix the property. You have to rehab the property yourself. You have to do the maintenance. You have to self-manage your property and all that stuff. You could be a part-time or full-time investor. You can trade time for dollar. Don't do that. You need to focus on what's important to you, the quality of time. You're not going to trade time for dollar. So you don't need to spend time to manage your portfolio. You delegate, you outsource. You delegate to your team on the ground, property managers and the whole team on the ground. And then you outsource to your tenant. Your tenant going to make you wealthy. Your tenant going to pay down your mortgage. Your tenant going to pay your taxes, insurance, property management fee, and your mortgage, as a matter of fact. And you still have positive cash flow at the end of the day, at the end of the month. That is absolutely amazing. We have deals of the week. This property will go very fast because our investors compete against each other to pull the trigger whenever we release the next batch of properties in any given week. It gets sold very quickly because these returns are absolutely astronomical, great location, and all that. 2 years of property management, 1% seller credit. These duplexes are 2-bedroom, 2-bath. Some are occupied, some are not, but they're easy to rent because there's a shortage of homes in all over the market that we're promoting. Lawton, Oklahoma is one of the area. Chickasha is the other. And then we have other areas like Perry and Oklahoma and a few other places. Chickasha. So all these great features. A duplex, 375K. Where else can you find a duplex for 325K? Brand new in a fast growing market, such as here in Oklahoma. Look at that. Immediate cash flow, great bedroom count, and very good square foot per unit. Great features, interior, walk-in closet, covered patio, two-car garage for each unit. Look, two-car garage, quartz countertops, open concept kitchen, a lot of luxury features in the interiors. I think two-car garage per unit. I'm not sure. Don't quote me. Furthermore, I just mentioned 40% ROI. That is your blueprint expectation. That when you buy in our markets, not only in Oklahoma, in several markets that we have this similar markets that we're presenting, I think 40% is just the tip of the iceberg, because in case you have not heard, nationwide, there's a 40-year affordability crisis. That means in the past 40 years, we have never seen homes are this affordable. People are being priced out of home ownership due to the skyrocketing of home prices in the past few years and elevated mortgage rates. So we are seeing the renters nation like you've never seen before. I say it again, there are more people renting now than ever before. And all the information that I've been hearing and I've been researching indicates that the rent is about to increase nationwide, not just in Oklahoma. So as you can see, single family home rent is the way to go. The rental increases on a percentage basis with single family home versus multi-unit renting is higher. So you could get more rental rate increases, increasing your cash flow in the future. Okay? So your return could be more than 40%. See, 2025 is a renter's market, expert says, but let's know for this kind of property, which is single family home, duplex, and up to fourplex. It's the 1 to 4 unit. That's where the rental market, that's where the rent is poised to increase pretty dramatically in the next few years, as indicated by this article. And also, renters are stuck renting for longer, of course, for the reasons I just shared that with you. You can read all about it. Look at this article by National Association of Realtors. Renters are stuck renting for longer, so good for landlords like yourself. So you can have plenty of renters to choose from. High quality renters, they can stay, rent your home for several years. So what you get is you get high quality tenant that will take care of your house. There's have a high likelihood of staying, so occupying your property for more than 1 year, although you're getting a 1-year lease. But what you get is high quality tenant, new construction that have a 1-year warranty, 10-year warranty. So your maintenance issue can be very minimal. Your vacancy will be very minimal if you buy in a property in a bad location, not so desirable location, and your tenant turnover is high. Each tenant turnover can cost you several $1,000s. That'll eat up your cash flow if you buy a resale older owned in the not so good market, like such as the Midwest. I hate to pounce on the Midwest, but you get very low vacancy, very low maintenance costs because it's new construction, high quality tenant. So you can capture more of your money at the end of the day. Come on, think about this. Think about what I just said. This is absolutely mind-boggling. Let's fast forward. Again, the cost of buying a median price of a home nationwide is $400,000, and you need about $115,000. You need to make $115,000 in order to afford a home these days. So we are seeing the epic renters nation, which is good for landlords such as you guys. So all this data support everything that I'm presenting. Here we another article that show you people just so sad. People, blue collar worker had to slave away 100 hours per week just to afford to rent an apartment. Pretty sad. This is the numerical formula. You can learn more about it. It's not rocket science. This is a 6th grade math. This is a formula I just share with you throughout the presentation where you can learn how to calculate the returns based on this simple formula. So digest this on your own, learn more about it, so you become a more informed investor. At the end of the day, what is your exit strategy? The exit strategy is that you buy in a good growth market, path of growth, like I should show you based on 5 to 7% appreciation. Oh, I don't know. I don't have a crystal ball. Based on 5% to 7% appreciation, where you buy one or more of this property, if you have the capital available, you hold two to 6 year hold, then you sell the property or you do a 1031 tax deferred exchange to scale to more property. You sell one property after the appreciation, hopefully, you buy two more, or you do a 1031, or you can do a cash refinance on your existing property, keep the property, and buy two or three more. So that's how you scale. That's for the next 10 to 15, 20 years using this formula. I'm not going to go over these numbers, but digest this slideshow once again. It'll show you how you can leverage, how you can scale your real estate portfolio. You can use the equity of your home. You can do a cash refinance, tax-free, by the way. Tax-free cash refinance. You pay no taxes to buy multiple more properties. So that's how you buy your one rental at a time. Over the next 2 to 6 years, you have the potential. If the projection is miss the requirement, you can cash out refi, or you can do a 1031 exchange to leverage into multiple more properties. That's how you scale. The power of real estate investing. You buy these cookie cutter investment homes, put 20 to 25% down payment, and buy all this portfolio, not just in one area. You can diversify your property purchases, Texas, Florida, Alabama, Oklahoma. You diversify your portfolio over time. And before you know it, you can have more than a $1 million portfolio, retire in 10 years past monthly passive income, 10 properties, and it's ideal. You can do a lot more. If you're really motivated, if you're really ambitious, that's how, this is the magic formula. This is just looks like a chemistry theory, like something that Einstein invented. You are the modern day Einstein of real estate investing. That's how you scale your portfolio using the equity growth, cash out refinance, 1031 exchange to scale your portfolio by one property to scale way beyond 10. In fact, as a matter of fact, you need to have you need to build your empire mindset here. You need to think like an emperor. That's how you scale 1 to 10 property to even 100 properties. There's no limitation to how many properties you can buy over the next 5, 10, 15, 20 years. Your only limitation is by your limited mindset. Your mindset is the only limitation. Nothing else can limit you. Build your empire mindset, step by step, action by action. You can do this only 1 to 2 hours, 1 to 2 hours per month in managing your portfolio. It doesn't matter how many properties you have. And some of you are thinking, oh, this is not doable. Yeah, really? Well, you don't know. You don't know. You don't know what you don't know. You are surrounded by your team, your mentor. Could be me, your consultant, your partners, this is your inner circle. Your property manager is your support circle, contractors, accountants, lenders. All this team of people, they're going to work hard for you. You work smart. Your team on the ground in Oklahoma or wherever, they will work hard for you. You can become almost a passive investor in what otherwise should be an active investment portfolio managing. No. Long-term appreciation. The only downturn happened in the global financial crisis in 2008 to 2009, 2006 to 2009. That's the only housing crash that we have seen in the past 100 years. Long term, your houses will always appreciate in value. That is what you need to know, regardless of what you've been hearing, all the negative information you've been hearing. Don't just tune out the noise. Warren Buffett, the great legendary Warren Buffett, he said, be fearful when others are greedy and be greedy when others are fearful. You need to be greedy in a good way. You need to become a capitalist, capitalize, take action right now, because there's little competition. There's little competition. That means you can make all the great deals. These are great deals you buy right now. And when the competition is low, here's my information right here, my coaching and mentoring, contact information, which you can find elsewhere on this video. At the end of the day, I know the mortgage rate is very high right now. It's like 7% mortgage rate, volatility of the mortgage rate, but that shouldn't stop you. But a lot of people are staying on the sidelines because of various fearful thinking, all that volatility going on, high mortgage rate, this and that. But that's why you have very little competition. If and when the mortgage rate going to come down in the next 2 or 3, 4 years to maybe 6% or 5.8%, then all those, the herd mentality, people are going to come off the sidelines and they're going to bid for homes, and it'll drive up the prices even more. So right now it's competition. You need to think contrarian, pull the trigger right now, because you're going to thank yourself later on down the road once you achieve massive generational wealth. So all the negativity, all the doom and gloom, all the doomers, all the crash bros out there, all the negative information, they are designed to mess with your head. Real estate is doing well. There's still a shortage of homes out there, huge shortage of homes. So all the economic metrics are in your favor. Right now is the greatest time to be a landlord when all the chaos is going out there. So focus on your personal goals. Get your ducks in order, put your capital in order, manage your money correctly, get your down payment, get pre-qualified, and start buying rental property. So you can thank yourself later on that you did this today while all the chaos is going on with the rest of the country and in the world. That's all I have to say right now. If you receive any value whatsoever from this video, please like and subscribe to my YouTube channel. And also, once again, put your email on my website below so you can become a free member of our investment community. It consists of several thousand members who are pulling the sugar to buy these type of properties, which I presented to you. Invest for the long term, stay the course, and be consistent, focus, show daily discipline, and invest for the long term. Ignore all the volatility and just live off the cash flow, and everything else will take care of itself. Long-term, 10-year journey at least. Thank you so much for watching. Have a nice day. This is Si Wing Yi. See you next time. Bye-bye.